Hi, I'm David Witter, founder and CEO of Financial Harvest Wealth Advisors, and there's been recent turmoil and volatility in the equity markets, primarily driven by what's going on in the Shanghai index or exchange in China. And I've gotten a couple of questions concerning this, and I thought it'd be very relevant to you to do a quick video. So I've titled this, "The Chinese Market Meltdown, Should I Be Worried?" So here we can see this gentleman is very fearful as he looks at the exchange board, and for good reason. How bad is it? In the last month, we've seen that the index has lost 28%, and on Monday alone, it lost 8%. So a lot of downward volatility here to be concerned with. However, as we always commit to you, giving you perspective and wisdom, let's take a little bit closer look at what's going on with the Shanghai Composite. First of all, the Shanghai, even with the 28% recent decline, is still up 75% compared to last year. So you can see here, these young Chinese citizens are very pleased with the results of the Shanghai Composite, even with the recent pullback. Secondly would be, is there room for additional growth? Well, keep in mind, in the last 6 years, the U.S. equity markets are up almost 200%. Meanwhile, the Shanghai is only up 8% during that same time during those last 6 years. So a lot of room where that Shanghai index could have future gains. Secondly is the Shanghai peaked in 2007 at 6,000, and today it sits at around 3,790, somewhere around 60% of that peak. So it's well off of the peak that it hit in 2007. The other thing that we might want to look at is, what is the economic impact of the Chinese economy on the world at large and also here in the U.S.? I think there's some misconceptions here because their population is so large, but let's look closer at the economic impact. They are the second largest economy in the world, but keep that in perspective. Remember back in 1989, Japan was the second largest economy in the world. And in the 90s, they had a tremendous bust, but that didn't affect or didn't prevent the U.S. from having a terrific boom during the 90s, and especially all over the globe. So even with the Chinese economy being the second largest in the world, if it has difficulties, that doesn't necessarily mean that it's going to affect the world too much. In fact, look at this a little bit closer. Exports from the U.S. to China only represents 0.7% of U.S. GDP. What does that mean? If the Chinese economy completely fell off the face of the earth, the U.S. GDP impact would be 0.7%. Remember, in 2014, the U.S. economy grew at 2.5%. So a 0.7% loss, it still would have grown at 1.8%. It wouldn't even gone into a recession. So not a huge economic impact in terms of Chinese buying services and goods from the United States. I like to look at it this way. It's like, well, actually, these roles should be reversed, right? The sumo wrestler should be the U.S. economy and the world at large versus the Chinese economy. The last thing I'll leave you with is long-term perspective. In December of 1990, which is when the Shanghai Composite started tracking records, you can see that it stood somewhere around at 100. Here in July 2015, it stands at 3789, 38-fold increase during that 25-year period. That is a 16% annualized return. So tremendous growth in the Shanghai Composite, regardless of the recent volatility. So what does this mean to you to be successful with your wealth and as an investor? First is, there's little economic effect, even though there's a lot of media hype about the recent turmoil going on in the Shanghai Composite and the Chinese economy. Secondly is, allocate to emerging markets, but you need to do that in a prudent way. But what we look at is having some exposure to the developing world, the developing economies such as China, maybe not through the Shanghai Composite, but China, India, Indonesia, the Philippines, Turkey, but having that in a very appropriate small allocation of your portfolio due to the volatility. And last but not least is the way you get access to those developing countries matters. How cost effective is it? And do they actually honor property rights when you buy the equities on those exchanges? So keep those things in mind, give you more wisdom perspective. That's bundled in with giving you peace of mind and also freedom to live a good life. That's our commitment here at Financial Harvest Wealth Advisors. I hope this short video helped you do that.